Hi, I'm here to take you through the interview, the key highlights of the interview with HCL Tech management post the Q4 results and what brokerages do have to state for HCL Tech. Quickly, a quick snapshot in terms of the Q4 results. It was slightly a big quarter coming in for HCL Tech. Although the new deal pipeline was fairly strong, with the new deal TCV coming in at an all-time high. According to the analysts, HCL Tech did disappoint slightly on the margin front as well as in terms of the profitability. But it's also kind of a mixed picture in terms of the FY22 guidance. This is what the analysts have to say. FY22 management guides for a double-digit growth on the revenue growth front, and also in terms of the margin guidance, it's seen at 19 to 21% for FY22. In fact, ET now spoke to C. Vijayakumar, who is the president and CEO of HCL Technologies, and Prateek Aggarwal, who is the CFO of HCL Technologies. And here is what the management had to say. They stated that the new deal TCV has hit an all-time high this quarter at $3.1 billion, and they have won 19 large deals, mainly transformational deals, and the deal pipeline is at all-time high. In fact, if you look at the new deal TCV of $3.1 billion, analysts do state that this is larger than the Infosys $2.1 billion new deal wins. Management also states that they have added 4 new clients in the $50 million plus category and 5 more in the $10 million plus bracket on a sequential basis. According to the management, the deal momentum is fairly broad-based across verticals. The nature of the deals is right from cloud analytics, digital workplace, cloud migration and cloud adoption also drove IT segment revenue growth. And although we did see the engineering R&D segment dip on a YOY basis on account of the exposure to some of the manufacturing clients, aerospace industry as well as the auto industry. In Q4, the largest deal came in from Europe-based energy company, and also they have been selected by a global technology company to drive product innovation. Management also mentioned that they do plan to hire close to around 15,000 entry-level hires in India across geographies including US and Canada, and also they have guided for 19 to 21 EBIT margin guidance for FY22 and a double-digit growth in FY22. They expect strong growth coming in US and Europe, and they are also seeing good spends coming in the financial services sector, especially in US. Prateek Aggarwal, who is the CFO, he also mentioned that FY21 dividend declared was 26 rupees per share. This includes the Q4 dividend of rupees 6 per share and a special interim dividend of rupees 10 per share. On the margin front, management did mention that yes, there is likelihood to be some impact on account of wage hikes. However, growth itself would be a key margin lever, along with the fact of improved utilization and improved operating leverage. Most of the brokerages to continue to maintain a buy, but it's been a mixed bag or a mixed verdict from brokerages. CLSA has a buy with a target of 11.50 per share. They're stating that Q4 results are optically weak, and they have raised FY22-23 revenue forecast. They also, if you look at Credit Suisse maintains an outperform with a target of 12.50. They do state that FY22 revenue momentum remains strong, but margin is that disappointing, and they have reduced the FY22-23 estimates. Growth will be driven by Mode 2 products and platforms. Goldman maintains neutral with a target of 975, and they have cut the FY22-23 EPS, but they also acknowledge the fact that HCL has record new deal wins in Q4. So mixed verdict coming in from brokerages, but I would say slightly healthy guidance also coming in from HCL Tech.